Geez, my name is Trekkw2ks, and just checking on the mic. Sorry about that. So I'm Trekkw2ks. This is Weekend Crypto, brought to you here on the Gentleman of Crypto YouTube channel. And so, if you don't know, the basic idea is I cover news that happens on Friday to Sunday and record it out, pop it out on Monday morning as you're going into the week, just so you can recap on what you might have not been paying attention to or didn't know happened. This weekend, I don't know. I don't know exactly how to phrase how this weekend went. There's certain things that I've noted as far as certain think patterns and trends that have been going on with Cardano over the last couple of months, where somehow they are constantly in the news cycle. I don't know how their media management team is doing it, but it's a constant, and it makes me more skeptical of their things. Ironically enough, I do got a Cardano story. Nonetheless, I do want to say thank y'all for tapping in on what's going on, what I'm saying here on the Weekend Crypto. Thank y'all for tapping in for the other folks who are also pushing stuff out on the Gentleman of Crypto YouTube channel. But right now we're gonna focus on this side. So yeah, I appreciate that y'all are not letting this whole crypto winter bear market, FTX, blah blah blah. Crypto is dead, Bitcoin is dead 1,000 time again, whatever, keep y'all from not actually getting different inputs that are not speculatively based about what's going on in the space. Because trust me, there are a number of things going on in the space. So yeah, I just want to say thank y'all for that. I really do appreciate. Also, I do want to say thank y'all for tapping in on the other show that I just started with my homeboy 3D. Metaverse is the other side. So far, it ain't like quote viral numbers, but we appreciate that folks actually did tap in and look. So it's a couple hundred right now, but hey, it's a slow start. Like we know, right? We geek out. This ain't about the speculative side of stuff, but nonetheless, another episode will be up this Friday. Again, it starts at 11 p.m. Friday evening East Coast time. And if you want to tap in on the live stream part of it, we do the Twitter Spaces actually on Thursday at 8 p.m. Check out my account or the Builder DAO account. Link for this is in the description to those accounts as well as 3D's thing, but that's in the metaverse joint. But nonetheless, I appreciate, thank y'all. And so let's get into these stories 'cause I've been going on too much, right? So, first story, I'm a guess to say yay and clap for adoption, right? Like this whole thing of like mainstream is a thing, we got to get everybody else to be on it. So, AVAX receives major boost as Alibaba Cloud expands support for Avalanche. So, hand claps for adoption. Now, granted, let me read into this story, a couple of highlights, and then I'll say my thought process on this. So basically, what we have is Alibaba, a subset of Chinese e-commerce giant, sorry, Alibaba Cloud, a subset of e-commerce giant Alibaba, has expanded its line of cloud infrastructure, technology, and developer tools to the Avalanche blockchain. As per the official announcement, the partnership will enable Avalanche users to launch validator nodes, build projects, and store and distribute resources through Alibaba's cloud suite of products in Asia. So not necessarily gonna be the Western market, but whatever, nonetheless. Thus, Avalanche developers looking to launch validators can leverage Alibaba's cloud reliability, readily available plug-and-play infrastructure as service, so IaaS, to support their network. Application developers can also utilize the platform's available infrastructure to improve their product and keep up in times of peak demand. Where's the other? Okay. So where's the other thing? Oh, launched in 2009, Alibaba Cloud operates in 28 regions. I honestly did not know that. When I read this, I was like, wow, I didn't even know that. And it is the largest cloud service provider in Asia Pacific. Globally, it ranks third after Google and Amazon Web Services, which I also did not know globally they're in the third seat. That's a big kind of statement in regards to who it's being compared to on a global scale. As a cloud computing arm and a business unit of Alibaba Group, the platform hosts over 2,800 nodes. It offers a wide range of cloud computing services. All right, so yeah, it got numbers, right? So arguably, yes, this is a good thing. This came out over the weekend. So Avalanche now has a connection into that whole suite of development and stuff on the Alibaba cloud side as a service. A new centralized platform came in to be like, hey, If you don't want to mess with the Western centralized backend cloud service platform, come mess with this side. I see. Okay, there's a couple of things I project on this. One, there's going to be some geopolitical footballing down the road for Alibaba. Sorry, not Alibaba, for Avalanche. The other thing to note, this sounds cool now, arguably, but then the question is, will this relationship make it through the next 36 months? When we get into the Bitcoin halving, we all know at this point, everybody else's price and stuff. There's a number of things that are just running through my head on how will this relationship look come 2025 if it survives? Will other Western-based blockchains look to also jump in on that? Or will Alibaba Cloud look to offer their services into other blockchains? I imagine it can't be that they're just looking at sticking with one. Like, that's just not how the money part of it will work out. But nonetheless, it is going to be interesting to see what happens with this. Again, this is for the Asia Pacific market. This is not about the Western thing. Some folks might look to relocate and figure out how to tap in on that because they're tired of what's going on with Google and what's going on AWS. And as we all know, over here in the West, we got the regulations that are about to start really kicking in come 2023. So, you know. All right, so here's this other joint. Now, I included this because it had a crypto name company in it, but it is not directly crypto. So, ADA, what OpenAI's chatbot, ChatGPT, thinks about Cardano? If you don't know, like over this last week, the chatbot, the AI software that is being pushed out by a company called OpenAI, they have been really making waves in the AI chatbot space. I've seen some stuff popping up on Twitter. I've seen it popping up in a couple of other groups that I'm in. And so a lot of people are playing around with it right now, and they're also doing their thing to try to get people's awareness of what their chatbot does, which is basically it scours certain information sources. So in particular, I think the one that's really been floating around is how it scours through Twitter's public posts, public accounts, and then it takes the information in. And then, so you ask it a question, it runs through all of what it can find in Twitter, and then it puts together like an answer for whatever you asked. That's what OpenAI chatbot does. And so this is what it had said about what it thinks of Cardano. So let me run into this highlight real quick because there's a reason why I brought this up. And let me get into the highlight. All right, ChatGPT, which is a new chatbot formed AI-focused research institute and technology company, OpenAI, may not know much about itself, but it can certainly talk intelligently about a very wide of topics. That ain't even written right. Including, it should be like a variety of wide topics or something like that, but whatever, including Cardano. Again, like I said, Cardano be doing stuff to get in the news. Their media people, y'all be on it. Like, I shit you not, y'all be on it. But nonetheless, so here is an example of a question that was asked about what thing is. Sorry, that's actually from the team. The examples are the ones down here. I'm running on time, so I don't even know if I'm gonna actually run with the whole thing, but I'll read you part of what one of their people said. We trained our model called Chat GPT, which interacts with which interacts in a conversational way. The dialogue format makes it possible for GPT to answer follow-up questions, admit its mistakes, challenge incorrect premises, or reject inappropriate requests. ChatGPT is a sibling model to Infrastruct GPT, which was like the predecessor, right? The basic idea is, like I said, they took information sources from a certain amount, and I think for ChatGPT, it goes as far back as 2019, at least for the stuff that I've come across about it. My point on why I'm bringing this up, and I'm gonna read you this quick little answer it came up with for what it knows about Cardano. IOG, or Input Output Global, is a company behind the development of Cardano. IOG was founded by Charles Hoskinson, one of the co-founders of Ethereum, and is a team of researchers, engineers, and developers who are working on building Cardano into a leading smart contract platform. IOG's primary focus is on creating a secure, scalable, and sustainable blockchain network that can support a wide range of decentralized applications. This includes developing an underlying technology for Cardano, such as Ouroboros proof of stake consensus algorithm, as well as building tools and services for users and developers to interact with the network. Now, that is an AI software that made that up. Why am I bringing this up to you? I'm bringing this up to you because one of the things that we're rumbling about in one of the Telegram groups I'm in is what happens when we start seeing AI being introduced as informational sources. There's already algorithms that is being used. There's already AI being used to make content. We already know about text to image, text to video, being able to take text to audio, and then you have the whole like this decade, the deep fake game is going to get extra real. You're not going to know how true or real the source of information is when you see something pop out on Twitter, when you see something pop out on TikTok, okay? And I'm going to argue this is going to play a major role in it. It's not just going to be crypto, but I brought it up because this story was about a particular cryptocurrency, Cardano, but it's going to expand up into other things. You will see this popping up more in the space as we move further along this decade. I just thought to throw that out there just so you have it on your radar. All right, next story. Attackers pocket 20 million in exploits on Ankr and Helio, which, all right, it was funny when this joint happened. It was on the 1st of the month. It was like, I think 1 or 2 in the morning when I seen it, and that's technically on Thursday, but the stories didn't start getting written about it until, I think, Friday or, like, later in Thursday, but then it really captured X amount of what was going on Friday, right? What did I do? I did a post that was like, "Bone Thugs and Harmony, it's the 1st of the month," and I'm like, "Yo, you gotta be kidding me." Let me get into the highlights of this so y'all can understand why this shit was funny as hell, okay? So TLDR, Ankr and Helio protocol lost a total of 20 million in 2 attacks. 3 millions of the stolen money sent to Binance was seized. I have a thought about that. I'm wondering something. Hold on, let me change this color out. There we go. So a series of connected attacks ended up costing infrastructure provider Ankr and stablecoin issuer Helio protocol, I know I might be saying that wrong, a total of 20 million, according to an on-chain analysis by security firm BlockSeek. Okay. First attack targeted a liquidating staking token product by Ankr, resulting in the loss of more than 5 million. What is it? An unknown hacker leveraged a vulnerability to Ankr smart contract to mint trillions. Yo, when I tell you the number, when I seen the number, like I said, I was up on Twitter. I don't remember what the hell I was doing. And I happened to see the thing pop out on one of the people I follow. And then I looked at the number because they circled the number and they was just like, yo, what the hell is this? It was like 5 trillion something. So I had to use my finger and go 1, 2. I was like, millions, billions. Yep. Listen, these hackers are getting bold as shit. But I gotta say though, if you got these vulnerabilities and folks is trying to tell you about it, hey, you're not listening. Nonetheless, this happens. And basically they got for 20 million. I'm not gonna get into this whole thing. Let me change the color out on this one. Oh, pardon me. Um, Bloxy noted that, damn, sorry about that, y'all. Bloxy noted that 15 million of the stolen funds in the second attack moved to the crypto exchange Binance. So far, 3 millions of the funds have been seized, according to Binance's CEO, CZ, because I always mess up how to say his first name. Here's something to note. All right, let me run down my little thoughts on this process right here. One, I'm curious as to why, if you know how the tracing process goes, would you then look to run back to Binance to try to exit out? I don't think that was, I don't, how do I say this? I don't think the purpose of the hack and then them going to the Binance exchange to off ramp, I don't think off ramping was the purpose. Because if you know how the security part works for them to be able to freeze stuff, why would you go where you could be blocked? Other thing to note, if 15 million went to Binance, how is it that you were only able to freeze 3 million? Where's the rest of it? And then also throwing this out on the block folks, why didn't you have somebody actually like, hey, here's the transaction, here's the Binance Explorer. Let's show y'all where this stuff moved around at. I'm just saying this isn't the best article, but I did want to point out that this happened. I know some of y'all be into Binance and y'all be messing around with all of their fun protocols and stuff. Just wanted to throw this out there. This hack doesn't doesn't seem like it is just a regular hack to me. I think there's more being played out than just, oh, they got 20 million. That's just me though. Like it just the way it was being reported and then what I was seeing on Twitter, it just didn't make sense to me for a hacker to go to where they knew they could be stopped. So I'm questioning the whole thing of what was the point of this hack. But that's just me though. Hopefully none of y'all lost anything. Just throwing that out there. All right, so let's get into this story because when I seen this, I said, okay, all right, let me read into this a little bit. Don't forget, the links for this will be in the description. If you got some thoughts on this, please do share in the comments. You know what else I gotta ask y'all? Because I don't never do the call to action. Please share, please, what is it? Thumbs up, tell a friend to tell a friend. I appreciate all of those things. And then the bigger German crypto thing, we appreciate it on that part too. So this dude, you don't know who he is. He was one of the early co-founders of FTX, believe it or not, okay? His name is like Brent Harrison. So former FTX US head is raising money for crypto startup. So now let's get into these highlights. Former FTX US president Brent Harrison is raising money for a crypto startup, according to people familiar with the matter. As you see, this is Yahoo Finance, but it originally started in Bloomberg. I'm not dealing with Bloomberg's paywall, so if you want to deep dive in on it, I would recommend looking at Reddit. You might find some other more interesting details in that part of it, unless you already got the Bloomberg thing, the Bloomberg account. Nonetheless, so a little bit more on the highlights. The information reported Harrison's fundraising earlier this Friday, adding that he was seeking 6 million at a valuation of 60 million. My guy, you got to be like hot shit right now. I don't even know who's necessarily touching you. Now, granted, the thing to understand about this, the nuances of this in particular is he left before everything really started jumping off with FTX. And I mean like the early part of FTX when they were on their rise to fame and empire building and stuff. So it's one of those, okay, how much did you know? How much did you not know? But he left X amount early. But I'm gonna still put the question in, how much did he know? All right, here's what he's proposing. The proposal idea was for software that crypto traders could use to write algorithms for strategies and to access different types of crypto markets, both centralized and decentralized. Two people said. Now, here's my thing. You know what? Let me get through the other highlight so I can get to my his exit from FTX US came in late September, months before the public unveiling of Sam Bankman-Fried's months before the Sam Bankman-Fried's empire began. Like I said, this is the early part. So this is like probably in 2019 or because I forget when they started. It was either 2018 or 2019. But he didn't sit around too long. But there's still questions. Why? Because of what the rest of this paragraph says. At the time of his departure, Harrison had worked for FTX for a little over a year. Earlier in his career, he was at Citadel Securities. He was also a quantitative trading and at the quantitative trading for Jane Street, where he initially worked with, right? Excuse me. So my point within this is that he was already in these financial sectors or these companies that are well enough known in these financial sectors, and they definitely work to do what they can to be in the best position of making money. So now my then question gets into he sees what's going on here at FTX early enough and is, I don't know if I want to stick around because at least according to this article, it was a sudden like, all right, I'm out. I'm not going to be here anymore. Let me just take my cut and go. Other thing that I want to throw out there is, and I don't know if this dude's a coder or not. This particular line got me about what he's looking to do. people are already writing algos for you to be able to get the arbitrage thing going. What is it? 3coms.io, a couple of other different platforms already have it where you can basically copy and paste people's trading formats, right? Those are algos already. The barrier for a more commercially viable product is that have a commercially viable algo that you can put together that would do decentralized and centralized exchanges. So that's like okay, that would be something I could see that. The thing that gets that though is how are you dealing with KYC, my friend? How are you dealing with KYC? Okay, because that definitely will get pushed on you, especially if you say you're trying to cross the decentralized barrier, unless you're not really talking real decentralized exchanges. I'm just saying, I'm just throwing that out there as at least my thought process. I don't know if this dude's gonna make it in regards to setting up this company, but it will be interesting to see if he is able to set up the company. I'm also curious, is he going to get called up for questioning when at some point some type of investigation starts on Sam Bankman-Fried? I'm curious because if he don't get called up, I don't know. You know how like nobody really wants to know, but we'll see how that whole thing plays out. I don't know what this is gonna lead into, but if he does get it, I could see it being a viable thing. I'm just curious on how you're gonna deal with KYC side of it because you're gonna have to meet compliance, especially if you're gonna be registered over here in the US jurisdiction. Thought process on that. Other thing to note, another story connected to FTX is FTX Japan to unfreeze withdrawals of client funds. All right. So I first read the story and I'm just like, all right, cool. This sounds like really? I didn't know they were that separated for how they had FTX Japan, FTX US, FTX in Europe, FTX over in the Caribbean. I didn't understand that they were that broken up. Now, reading this highlight, this week we're able to confirm with the law firm representing the FTX group in Chapter 11 bankruptcy proceeding that Japanese customers' cash and cryptocurrency should not be part of the FTX Japan's estate, given how these assets are held and property interests under Japanese law. So here's what I had to like read a couple times to get what was going on here. So FTX Japan said in a statement, this title is misleading. So what's happening is the FTX people who are in charge over there are following through on the Chapter 11, but they're going, hey, because of how things were structured here in the Japanese regulatory setup for crypto, we did what we were supposed to do with these assets. So it shouldn't be a part of the bigger bankruptcy settlement. Unfortunately, the regulators have not actually said, we agree with you. So this title is actually very misleading on if they will actually be able to let the people who deposited their crypto into the FTX Japan's custody, aka not your keys, not your cheese, right? Not your crypto. There's no clarity on that. There's not. And like I read through the rest of it, I was like, yo, this is a bullshit kind of piece. Cause it doesn't say that the regulators are agreeing. It doesn't say that the guiding agency, the financial something, the FSA, I think they call it, is, oh yeah, you guys are right. No problem. You right on that, law firm. Like, all right, we're gonna let y'all turn back on the withdrawals. That's not what happened. Nonetheless, my point is if you were actually somebody messing with FTX, which I swear we don't know nobody. Like, at least I don't know nobody. But nonetheless, this FTX situation on how y'all gonna get stuff out is gonna be drawn out for a hot minute unless you are really, let me not even say it that way. It's gonna be drawn out for a hot minute. That's all. Jumping on to this next thing. Wait, what happened? What happened to no? Okay, there we go. All right. So your boy Novagrass, there's a clip of him floating around talking on FTX. It's interesting that just started coming out now, but nonetheless, this has nothing to do with that in particular. This is actually related to, as you can see, Celsius, right? So Galaxy Digital wins Galaxy Digital wins bid for GK8 in Celsius bankruptcy asset auction. So this is I think it was an Israeli company that let me get through the highlights. Galaxy Digital announces it has successfully acquired self-custody platform GK8 for an undisclosed amount. Let me finish through. The sales within was all right. The sales was in connection to Celsius Chapter 11 bankruptcy proceeding, and has yet to be approved by the court. So it doesn't mean he got it. It doesn't mean Galaxy Digital got that asset, that element of the Celsius bankruptcy. Ooh, excuse me. What it means is, of the different companies that were like, ooh, I want it, ooh, I want it, they got the bid. Now the question is, the judge going to be like, all right, cool, you guys can have it, send your wire transfer over to blah, blah, blah. That's not clear yet. Galaxy Digital CEO Mike Novogratz said acquiring GK8 will help Galaxy offer its clients a whole stock of cryptocurrency services, particularly regarding storage solutions. He added that the deal was a strategic opportunity to grow the industry. Is it really a way to grow the industry if the whole real key thing for this is self-custody? But we keep wanting to fight this thing of why self-custody is important, and we want to try to do it in this conventional banking setup of give your financial asset or your asset to someone else and then let them do things with it and give you minimal award for it, if not any award. Right. But with the crypto side, we're like, oh, we can give you gains and we could do the over leveraging and you could do yield farming and blah, blah. We're experimenting the shit out of things, but we're still trying to do it where it's the old business model. I'm gonna argue, if certain things are actually on chain in public in a full view, from what I understand now, certain business models or like financial instruments should not work, and they're not sustainable models. That's at least my understanding of when you try to do every type of version, whatever, of traditional financial instruments that come from like Wall Street type folks. Yes, the technology can allow us to do some funky and fancy things, but they're not necessarily sustainable models, and some of them are just downright unethical. Some of the things that are being tried out. I'm not saying that's what Mike here is doing. I know that's Zay's dude. Um, but I'm saying that to say that this will help expand the industry, I think the further we move from understanding self-custody as the core part of this crypto thing, the more trouble we get ourselves into. At least that's what the last friggin' what, 6 to 8 years have shown us. Just saying. Nonetheless, when this company was originally acquired by Celsius, it was this much, over 100 million. If they made it past 75, I will be surprised. I would really be surprised. I'm gonna leave it on that one, y'all. That was my last thought as far as these stories. Nonetheless, the links for them, if you want to dig a little deeper, will be in the description on this. And at this point, you made it to the end. It is a Monday. And as I say, yeah, thanks for, like I said, tapping in on this stuff. And don't forget that this is an every Monday thing. And at 10ish will be the Gentleman of Crypto live stream around the 10ish hour, Monday through Friday. I'm just here on the Mondays. Oh, and at the end of this week, again, new episode of Metaverse the Other Side at 11 p.m. Again, we are a late night show or a late night content thing, whatever you want to call it. We doing it at late night. And funny enough, we're actually the first ones on that. So we'll see where this plays out. Nonetheless, I do appreciate, and I do want to say for those who are listening, have a productive over busy day. If you cannot have a productive day, at least be in a good space and in a safe place. And yeah, that's what I wish for folks on all basics. All right, y'all, I'm done. I'm rambling. Have a day, y'all. One.